Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 26th of June 2019, so welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick mentioning of our JFD Bank YouTube channel, to which you can subscribe in order not to miss all the videos that we do here on a daily basis. So yep, feel free to do that, and I hope you can find use from them. So yep, like I said, guys, we'll be always happy to see you on our webinars. So yep, please do subscribe here to our JFD Bank YouTube channel. But for now, for this session, let's quickly jump into the charts. Now, the first one I want to touch on here is silver. Now, I looked at this one a few videos ago. Basically, after finding good resistance here last Friday near, let me just put this level here quickly on our charts, near this area right here near the 15.55 zone, the commodity, the precious metal, reversed back to the downside and kind of started drifting a little bit lower. That said, it still remains above this short-term upside support line taken from the low of the 28th of May. So in a way, as long as this line remains intact, we will we'll continue aiming for higher levels, even if we see a slide lower here. One thing that you could do here is just maybe something that like this would help you to keep an eye on this one carefully, is this potential flag formation, or should I say this potential falling channel formation here. In a way, you can see that it's drifting lower right now. It's kind of within the boundaries of this potential falling channel formation as well. So in a way, even if we see a push higher, if it fails to push above this upper side of the this little short-term channel formation, then yep, we could see this one drifting back down. So in a way, something like this could be possible here. So where we could maybe let's say push initially to the upside, but if it struggles to push above this upper side of the falling channel formation, then yep, we could see another leg of selling, and this is where we will only target the this upside support line initially, and then we'll take it from there, see what he wants to do. In a way, it might not do this curve, it might actually reverse to the downside straight away, and it might actually ignore this whole potential formation here. The reason why I've drawn this is just so that in case we see a push higher, something to kind of refer to, or let's say, or to find the potential kind of resistance area for this commodity. And like I said, if it respects this little short-term falling channel formation, then it will be quite an interesting pattern here. So that's why, guys, for now, keep this just as an idea. But the main thing that we're keeping a close eye on here is, of course, this upside support line. If it remains intact, we could see another push higher here. Initially, we will target only the last week's highs near the 15.55 zone, but if that fails to withhold the bulls down, then a nice good break above this could open the path towards much higher levels. And by higher levels, I mean this area right here. Let me just quickly put that on the chart. This is what I'm talking about. So initially, we will aim for the 15.6364 zone, but if that fails to withhold, slightly above that we do have another potential area of resistance here near the 15.82 zone, so marked near the highs of the 28th of February, so good potential target. But of course, before we can consider all these higher levels here, we need to see this one pushing above last week's highs near the 15.55 level. If this upside line breaks, then yep, obviously, I mean, we will consider the downside. Again, we're not gonna go drastically to the downside. We're just going to aim for some of these key areas of support, like the 14.76. Of course, that means that the price could fall below the 15 zone. So and of course, if this falls below the 200 EMA here on the 4-hour chart, then yep, we will consider the 14.76 or below that. But for now it could be that the downside is slightly off the table, unless it's a small little correction here to the downside up until this upside support line. Jumping into one crypto here, and this is Ripple, so against the US dollar, of course. And so now looking at this picture here, of course it continues to push slowly to the upside. What you could do here is, of course, and you probably already marked that on your charts if you're following Ripple, then this little tentative upside support line running from the low of the 9th of June, so good potential line to watch here. If this decides to retrace a little bit more to the downside, like I said, this is the line that we're going to be keeping a close eye on, because we could see something like this happening here. We could see a nice rebound and a push back up again. The only thing is that also probably some of you have drawn this on your charts as well, and that's the kind of the triangle formation here. A bit of a not a straightforward one, but still probably something to keep in mind here. So in a way, if we see a push above this upper side of this triangle, still doesn't mean that we may see further moves higher. Of course, it would increase the chances, but in order for us, let's say, to aim for higher levels, ideally we would like to see a push somewhere around here above the 0.4885 zone, something like that. Then we will of course consider this last week's high here near the 0.51 zone. You can see that we had a nice perfect touch here. So in a way, in other words, what you could do here is just wait this one out, wait until we see a nice good push above the 0.4885 and then target higher levels. And that's of course if you're trading this one. If this decides to drop below this upside support line, and one of the levels that you could also keep an eye on here is this one right here near the 0.4462 zone. If we see a drop below that as well, then the next potential target could be around here near the 0.4190 level. Of course, don't forget that we do have the 200 EMA here on that way, the one that we could test as well, but a good potential area of support could be seen near the 0.4190 level. But then again, that's only in the scenario if we see initially a break of this short-term upside support line and then a drop below the 0.4462 zone, approximately there, guys. This level here is marked by the low of the 24th of June. So for now, that's the kind of the short-term game plan. Let's see how this is going to play out. We're not going to rush into this one yet. Like I said, we were going to wait for a confirmation break first, and then yep, we'll see we'll see if it actually can follow that that directional move here after. So jumping into a few pairs now very quickly, and that's the first one I want to touch on is NZDUSD. Now, I talked about this one yesterday in my Traders Tea Time and this morning in my Traders Espresso, and basically what I was saying, that to keep a close eye on this this level right here near the 0.66 81 82 zone, something like that. As you can see, it's now breaking this one to the upside. Of course, the New Zealand dollar is the strongest one today. You can see that how it did get this follow through from from this morning, and now the big question here is, will this stay above the 0.6682 zone, approximately there? If it stays above this area here, then yep, of course it could increase the chances for a further push higher. Now don't get me wrong, at some point we could see a bit of a correction here to the downside, but well, should I say, in my ideal world, I would like to see, personally me, I would like to see a rejection here near this 0.6682 level. If we do see something like this, then this would kind of drive nicely to the back down here, maybe even actually a test of this upside support line, and in a way this would in a way potentially confirm this nice wide range that we've got here, roughly between the 0.6480 zone on the downside and the 0.6682 zone on the upside. So good potential area of area here. Let's see if it actually plays out. Initially, we're not going to over speculate on this one too much. For now, we are going to continue observing this 0.6682 zone. If we see a nice good close, especially if we see, let's say, a daily candle close above this level, then yep, it could increase the chances for this one to push further up here. But of course, don't forget that at some point we may see it, a correction back to down. But let's see how this is going to play out today. If it, like I said, if it stays below the 0.6682 level, then that little correction could come a little bit earlier. So for now, keep your eyes on that one. A very interesting pair is the euro against the British pound. So EURGBP, basically it's a bit of a mess here. So as you can see, yes, from the beginning of May, this pair just continues to rally for 2 months to the upside, and as you can see by the monthly chart here, you can see how strong this rally is. In a way, it still has some room here if it would like to reach the upper bound of the Bollinger Band here. So in a way, it could continue pushing higher. The only thing is that looking at the 4-hour chart right now, you can see that today it did try to make a push higher, but actually it failed to drive above the highs of June here, the highest point of June near the let me just put this one on the chart, near the 0.8975 zone. So as you can see, it failed to push above that. It just kind of fell shy of a few points from reaching that level and quickly reversed back down. So in a way, you can see that it already had another attempt to push higher, but failed to reach to reach that level. But also, actually, that level coincides here with the R1, with today's R1. So in a way, what you could continue observing here is this this level right here, the 0.8975. If we do get a nice pop above this, then in a way this could be opening the path towards the psychological 0.90 level. But if it continues to struggle to push above the 0.8975, then well, it will be actually interesting to see a bit more correction here to the downside. What you could do here as well is just to just for the sake of it, have a little upside support line here. If we see a drop below this, then I mean, it could increase the chances for a further slide lower, but to be honest, a nice good drop below 0.8916 could in a way open the path towards slightly lower areas, and by slightly lower areas, I would say even actually going towards this little area of support near the 0.8870 zone. So good potential target and good potential support area. And if we would see something like this, now also something for you just to kind of keep in mind here, guys. If let's say this level right here, the 0.8975 level, continues to reject the bulls here, and we see this one sliding back down and dropping below all of these, this upside support line, this key area of support near the 0.8916 15, sorry, then yep, we may see a retest of this, the 0.8870 level, and if that holds, we may actually see a nice little range here. So also something for you guys to keep in mind. Again, this still needs confirmation, but could be an interesting formation here. It could be an interesting position here for Euro GBP, and of course we'll take it from there, see what it wants to do for after that. But for now it continues to flirt with the 0.8975. Let's see if it actually manages to break above it. If it doesn't, then yep, we could consider a bit of a slide here to the downside. So continue monitoring this pair. GBP Aussie, very quickly on this one until I ran out of time. So this one is today it managed to reach its key area of support. Now I looked at this one previously, and this area of support here near the 1.8129 zone. So it continues to act as a nice area of support. You can see today we had a perfect test of that, and we had a nice rebound from that level. So just slightly below that we did have the S2, so it never kind of reached today's S2. It just rebounded from this key area of support near the 1.8129 and pushed back up again. So of course, from the very short term perspective, I mean, of course it looks a little bit oversold. That said, I mean, the pound lately, well, the pound is quite on slightly on the weaker side right now, but we may see this one holding again. If it continues to hold this 1.8129 level, we could see a bit of a correction here back to the upside, and it will be very interesting to see if it actually can travel back towards the 1.8236 zone, approximately there. And let me just quickly put an arrow here for our future reference. So something like this could be possible. Also, just to keep in mind as well, something like if we see, let's say, a break below the 1.8129 zone, the last resort for the bulls to kind of hold the bears from kind of from letting them push this pair further down would be this area right here near the 1.8094 zone. So if we see a break below the 1.8129, the last resort here for the bulls could be this 1.8094 zone. So keep your eyes on this one. But if that fails to withhold, well, I mean, this could turn out to be ugly for GBP Aussie. So keep your eyes on this one. Keep your eyes on some of these levels, and let's see how this is going to play out. But again, like I said, from the very short term perspective, we are quite oversold, but that's it. I mean, we were oversold somewhere here as well, basically around the end of May, and look how it continued to travel and drift lower. So that's why this area here, of course, we may see a small correction, but if the bears are still stronger than the bulls, then yep, we could see further declines, especially if we see a drop below the 1.8094 zone. So keep your eyes on that one. 1.8094-95 zone, so approximately there, guys. Keep your eyes on this level, but for now the main focus here is going to be on the 1.8129. if it continues to hold, we may see a small correction back to the upside, and then we'll take it from there, see what it wants to do further. And the last pair I wanted to quickly touch on, and that's USDCAD. Now this one is a bit of a mess here as well. Of course, you can see that since kind of the mid-June, this one continues to fall, and the only thing is that, of course, it's quite oversold as well, but what we're going to do here is we're going to draw a few of the support levels here. So in a way, we're going to take a look at this level right here near the 1.3135, which acted recently, or should I say today, acted as a nice area of support from which the pair rebounded and pushed back up again. For now, we're going to remain neutral on this one because we're already quite oversold. Of course, in a way, it could continue traveling lower, but now what we're going to do here is we're going to wait until we see a drop below the 1.3135, and then we will aim for slightly lower levels. But by slightly lower levels, I mean the area around here near the lows of February, the end of February, which is approximately around the 1.3110 zone. So good potential target. I do understand it's only about 25 pips away, but it's a very good potential area of support here. So we're not gonna kind of ignore it, and we'll see how it's gonna play out around here. If it wants to continue pushing further down, then yep, we will aim for lower levels. But if it's gonna hold, then we may see a small correction back to the upside. But that's all in the scenario if we see a drop below the 1.3135 level. So if this decides to reverse back up here and pushes above the 1.3196 zone, approximately there, then yep, we will aim for slightly higher levels. Initially we will aim for the 1.3230, good potential area of resistance here, but if that fails to withhold, now this is where it could become a little bit more exciting for the bulls, as we could see this one pushing further up here. Initially we will aim for the 200 EMA here on the 4-hour chart, and then we'll take it from there, see what it wants to do after. For now, these are the levels that we're going to be keeping a close eye on. So basically on the downside is the 1.3135, which is today's low. And in terms of the upside, the level that we're going to be initially keeping a close eye on is going to be the 1.3196, or in a way you could round it up towards the 1.32. So a nice good pop above the 1.32 level could open the path initially towards a few higher levels here, but at least initially towards the 1.3230. But if that fails to withhold, this is where it could become really interesting for the bulls. Okay guys, I ran a little bit over my time, so I thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning at my Traders Espresso, as always, that's 6 o'clock GMT time. For now, I hope you have a wonderful and beautiful evening, and I'll see you later. Bye bye.